Hello guys, this is simplified effects, and I will be sharing with you uh, today. I want to share with you something on what do you call it, a powerful pattern that I use a pattern called Quasimodo pattern. Yeah, it's a pattern I use most of my setups, and it has been working all through. So the pattern, I'll share a sketch. I will show you a sketch of the pattern. Then we'll try to find some of the examples on the real charts. So for example, this is USD CHF. But first, let me share the sketch. And guys, as you view, guys, make sure you follow you view the video to the end. There will be more examples on the same. So these are the sketch of the Quasimodo pattern. This is a pattern I use. So we have the first example, this one. Quasimodo pattern, I think it looks like head and shoulder, but not really. The difference is it's somewhere here. The law of a Quasimodo is broken down, but for the head and shoulder does not break the laws. So the Quasimodo is refined by H, not H, but I low, I high, lower low. Then after creating the break of structure, you now look for the entry from the level of the Quasimodo. Always your stop loss should be on the higher part of the Quasimodo. Yes. So after the break of structure or the change of character, it's when now you identify this as a Quasimodo pattern. We have different types of Quasimodo. They form in different ways. So this this setup, it's some more advanced. You can see we have another block here. So this is a rally base, drop base drop. So this is some more advanced. We have the normal ones, of which I will show you in a sketch, and also in an example of a live chart. So this is it. After the change of character or the break of structure, I wait for the process or even the liquidities to be created in the market before now I can enter the market from this level. So this is an example in a sketch of a Quasimodo pattern. That is example 1. So we have example 2, which is this one. They almost look the same, but it's quite advanced. So this is for the buys. You will have to wait for the change of character from this level before now you can get an entry for you to confirm whether it is a Quasimodo level, a Quasimodo pattern, or even it might also form a head and shoulder. But if it breaks the eyes, it now confirms the Quasimodo level. I say for the head and shoulder, it does not break the highs if it is a buying setup. So this one is a low high, lower low, then we have a higher high. After the high, the market now has to come for the order block, or even on the level of the Quasimodo for you to get a buy. As it approaches the zone, it has to create some liquidities or even the fake outs. So we have so many types of fake outs. So I've just identified one. This one is a RS flip. This one was a resistance. This one became a support. Then you can see the market reacted on the fake out area. Then now came back to our zone. That is what happens in the market. So the last one, which is the normal one, this is the easiest one. It's this one. So this one is just the simplest one. So you have a high, low, higher high, then lower low. This is the simplest one. It is not complicated. So your entry should be at the level of the high, then your stop loss should be above the last high. Then now you target where the lower low was. So that is an example. So let's look for the examples in a chart. So this is USD shift. I had this one for an example. So as you can see, guys, this is a weekly time frame. It's a bigger time frame. This market was in a bullish move. Was buying. So we had a low, high, lower low, higher high. We expected this market to respect this low, then push to the upside, but it failed to break. So no, to respect. So it broke the level to the downside, creating a lower low. Yeah, maybe I can zoom it. Yes, so this is the lower low I'm talking about. So after the lower low, now the market started to retrace towards the level of the highs, or even the QML level. After that, it started creating other types of fake outs, like this is a fake out area, and then it hit our entry at weekly time frame. So I want us to look at a different pair, like Audi and ZD. Yes, so maybe we can look at our three or even our one. So it's almost the same thing, but yeah, you can see this one. So we had a market which was in a bearish move. This was a bearish move market. So we had this market. We had a high, low, no, a low, high, low, high, high, then lower low. Now breaking the previous high, hence creating a liquidity, not a liquidity but a QML. What I use to draw well my QMLs, I use a line chart. So I change the candlesticks from the bars to a line chart. So this is it. So my QML level is somewhere there, then my stop loss, then now I change it to that one. So my stop loss will be below the wicks of the last low. So that is it. So now this one becomes my QML, guys. It's very simple. If you master this pattern, I know you will be able to kill this thing. So this one is a low, no, sorry. So this one is a low, then we have a high. Now this one is an example of the common QML people know. So we have a 9, we have we have a lower low. So this is a lower low, lower low, and then we have a higher high from here. So this is a higher high. Yes, so this is a higher high. So after the higher high, the market started to create some liquidity. So you just identify any of them. Like here, I can identify something like this one. This is a fake out area. This one. Yeah. So these are the fake out. Yes. So that is a fake out area according to me. Then you can see very well, market after clearing the liquidity, it mitigated our area or even our zone. Then it started buying. So we can look at another example, like this one. Audi, maybe. Don't know whether I will get something good, but yes. So we have this one. Yes, so I said I change my candlesticks to a line chart when I'm identifying a QML. So you can see this low and this one. This low is lower than the other one. So then we have a high, we have a lower low. After the lower low, we add the higher highs, breaking the previous high. Are we together, guys? So this is it. You just identify by yes, that is it. Then now you can now change to a line, to a candlestick. Then your stop loss should be above, below this level. Yes, something like this. So I will change it back to a line chart. We have another QML. So like you can see, this one. This one was a buying move. So we had a corrective move to the downside, creating highs, lows, highs, low, something like that. So this one, we had the last low like this one, and the last high, which was this one. So this one was a low, that one was a low. Sorry, what do I use? So I'll use this one. But this one is for those who this one is very deep. You can't just, it's for the people who know these things. So this is low. Yes, like this is low. Then we have a high. Okay, so we have highs. Then we also have lower low. Lower low. So this is a lower low. Then now we had a higher high. From, maybe we can choose this one. So that was a higher high. So after the higher highs, you wait for the liquidities to be created in the market, or to be formed, or to be in the market. So we have a low, we have a high, we have a lower low, then higher high. So what we expect is for this market to retrace to this zone. Are we together? Then buy. This is what we expect. I will turn this one to a line chart, no, a candlestick. Okay, this is it. Then you can look at it. You can see very well it took the inner QML, not the main one. We had this one as our main QML. This one. Yeah, so this was the main QML, but we had the other QML inside. So that is how you identify the QMLs. And you can see very well after the move, after mitigating the QML level, the market moves very well without even going back. So we can look at another example like JPR. Yeah, we have this one. Then we can look at it. Wow, it looks good. Wow, already identified. Okay, like this one, this is a setup which I don't know whether when I looked at it, but maybe I can. Yes, this is it. Let me clear everything. So we had this one. We had a high, a low, higher high, then having a lower low. So this one was a QML level. Yeah, then our stop loss should be above this. But the stop loss, when placing the stop loss, make sure you consider the wicks of the market. You might be trapped by the market. So always make sure you change from a line chart to a candlestick for you to get a good stop loss for your entry. So I said this one was a high, a low, lower higher high, then lower low. So this is the point where I will be expecting this market maybe to react from here, then now it can maybe sell. So this was something which I'm waiting to see. Always wait as the market reaches the your QML level, it has to confirm the zone. So it's good you wait for a confirmation entry in all QML's level you find. So these are the examples I wanted to share with you. You can use another, maybe a bigger time frame like daily. So maybe we check on how DJPY. Sorry, JPY. Then I don't know. How DJPY. Wow. I'll clear the things which I can see from here. Yeah. So I said we look at the daily, then change to a line chart. Yes. Nice one. We have a nice QML here. So we have a market which was buying. We had a high, a low, a higher high, a lower high, then higher high again, breaking the previous low. So this one was the change of character, or even the break of structure. So our last high, which was this one, so now that is the QML level. Then we had a break of structure, maybe from here. So this one was a break of structure, or even change of character. Then some liquidities or fake out areas like this one is a fake out area. Market might react from the zone. Then the stop loss should be above this. This is the biggest now, the QML. And you can see the market does not break the QML. So maybe the target of QML, you target the lower low. So maybe this should be the target. I don't know, but as you can see, this one. Maybe I change to this one, then yeah, this zone is very big. It's a big one. Maybe it can come back then sell, but it will sell within this zone. If it comes back to this, maybe we have a rally based drop, a demand zone, a supply zone. This is a demand zone here from here, but mitigated already. But in the smaller time frame, I know you can get something, but these are QML. So that was it for today, and I'll be sharing more on those videos, on those things I use to trade. So this is it for today. It's what I ate for today, and I think I'm done. For those who have not subscribed to my channel, I please subscribe, as I will be sharing more on these kind of things. This is the pattern I use, a Quasimodo level, not a Quasimodo pattern. It's very powerful pattern that I use. We have the advanced Quasimodo, we have the normal one. So you learn a lot from this. So continue subscribing, share the video, and invite others to to subscribe to my channel, as they will be learning from the things. So enjoy your week. Goodbye.